Good afternoon, traders. Welcome to our trading room. We don't have as much people as we had yesterday, but I hope they'll join later. I guess most people are just waiting to watch a recording since the recording is out. And, hundreds of people could watch it. Why join the room live? Here's the thing why you might want to join the live room, because you can get your question answered, which is what we just did before we started. We answered a few questions and we'll answer a question afterwards. Those will not be recorded. So if you have a question you'd like to ask, or if you have something you'd like to know more, you can join us and get that. I'm going to do what we normally do every day. We'll start from the top with trades that we are in, or trades that we have setups on, trade that we have insured in, things that we're looking at, right? So this one we are expecting, on the silver, we're expecting a buy, but an aggressive buy, which means this morning when it starts to go up like here, when this piece started going up, I said, well, if this makes a flag here and break, we would try to buy it as an aggressive buy. Right? That's an aggressive buy here. That didn't happen. It actually came back to the bottom here. So this is good. This confirms the sell. So this goes back up here now. We get a running flat, and we're absolutely going for that sell, because we would assume that this is either a first move up or all the correction. Can we retest the low? Absolutely. At any point in time, you can retest that low. There is no need to retest the low. I don't think we will retest the low, but the possibility is you can, right? So what we would watch for here is when this goes back up here, put an end shoulder under the low. Two things can happen after that. One is it can continue to go up, or the second one is it can drop. See? That's how simple it is. If it drops, you're in the trade. You got a trade that you're looking for. That means this is a flag, and this trade is going to come down lower, at least one more impulse down. If that doesn't happen and continue to go up, we would look for a buy setup. But at the moment, there isn't a buy setup. You can't buy it in here, especially in a possibility of a running flat. See, we broke the low. In the case of a running flat, all this needs to do is come right here and drop. And that would be a sell setup. So since it's going up, you want it to go up some more. You don't want these little pieces. The little pieces could continue to go down for a while, and you get a long drawn up running flat. But as soon as it go up, we will change this into a sell. So I'm going to put the sell in the making. That means you're waiting for the setup to put the entry order in for the sell, right? If the setup happens, we will put it in this session on the sell. Euro, we have a sell on the euro, and we had it here this morning. If you were in the room this morning, remember this was coming down, and we said, well, we're not selling this because this has to go back up, and then it's going to come down like this, right? Now, here's the question. How far will that go? The assumption is that we're actually going to retrace this move. As the first impulse, this is 1, this is 2, you'll probably get 3, and this might just be one piece of the correction. Not the whole correction, one piece of it. So it might start to even do this. Make another 1, 2, 3, and then go, if we're going up. What if we're going down? What if this is a correction or the first impulse, but we're going down? Then this is probably going to drop, come back here, drop, go back up there, and then drop. This is the first impulse. If this comes sharp, we're going to make a bigger flat. If it comes not so sharp, which means this just drop like this and then start to pull back and drop again and pull back and drop again and pull back, we're going to make one more and then drop, depending how deep this comes. See? It's pretty easy. It's a complex set of patterns that once you know all of them, it's like, I don't know, it's like you opening the car trunk and you open the car bonnet and you have no idea what is an engine, or a mechanic or somebody who knows everything about it opens it. He sees everything, you see nothing, literally, right? That's how trading is. I see the structure because I know them. I understand how this pattern could even develop. All the possibilities, all the variations of how it could develop. You're looking at what I'm drawing and say, is he really serious? Like, is this guy serious? Is this thing really going to do anything like that? Because I'm drawing in the future, not even knowing what's going to happen. I'm drawing a possible future pattern with no information, absolutely no information of anything, not the economic, not the news, not whatever is going to happen, not a war, not a hurricane. But here is the thing. If you study the chart in the past and you look at these patterns, you never factoring any news event. Any news event. I mean, zero. You don't factor in any news, not whether there was a war, there was a hurricane. You don't factor those in. You just look at the patterns and they exist. There were wars, there were hurricanes, there were, I mean, a lot of elections, all kinds of crazy things happened. But the patterns were there. So with all those crazy things that could happen in the future, it will create patterns. These patterns just exist. That's part of nature. That's part of how it works. Why exactly it happens like this way? There's one simple explanation. That's how you make money. That's how money is made. And as long as the whole purpose of trading is to make money, not for us only, but in general, the whole big thing is to make money, something will happen to make it make money. And that means those patterns will have to repeat themselves. Very simple. Don't make it more complicated than that. Right? When some crazy person come out and said, hey, I am buying Bitcoin because I like to invest in Bitcoin. You can buy my cars in Bitcoin. And everybody goes and buy Bitcoin. And then the crazy person said, hey, you know what? I sold my Bitcoins. I'm not going to sell my cars to you in Bitcoins anymore. Guess what happens? You're left with a Bitcoin in your hand and he has a couple $1 billion extra in his pocket. Not that he needs it because he already has a lot of billions, but because you're stupid, he has some extra billions in his pocket. Your money that you had, he has in his pocket now. Good luck to you believing everything they tell you or when they're telling you it. That is what you learn. Don't listen to what they say. Watch what they're doing. Watch when they're buying, when they're selling, what is happening in the charts, because the chart does not lie to you. The news can. This does not. This is telling you what price it's selling and buying at the moment, how long it's been selling and buying, what patterns it's creating, and the high probability of what they're actually planning. What the market could likely do at this point, because that was the plan. And that's how forecast works a bit. So we're going to do into the small pieces, not the bigger plans. We're not in the big plans. We're going to go into smaller plans because they work perfect. It's coming down. Can we get an aggressive? You should move this entry to this level. Can we get an aggressive entry? If we get a flag here, a little flag, it's unlikely we're going to get it because when they're dropping, they don't make flags. But if we do, we're going to take this flag for the downside. But that is kind of unlikely. Most likely it will just drop. That doesn't mean you can sell it from here. You should not be selling it from there because you don't know for a fact that this is the one that is going to drop. This one could literally start to do this. Go back up, do this, go back up, do that, go back up. And you could be somewhere here. And then it does this, give you a running flat and go. But in that case, I'm not in the trade. I know that such pattern exists. So if it makes that pattern, I would never be in the trade. Would I be buying it? No, because you can't buy into those patterns. There's no risk to reward and you wouldn't really get any trade. See? So you wait for the setup, and if it behaves exactly like you want it to behave, you have a good trade. If not, then you're not in the trade. That's the advantage of wave analysis. That's the most important advantage you're getting of wave analysis, is that you're looking for structures. And if these structures behave the way, if these patterns behave the way you expect them to behave, great. If they don't behave the way you expect to behave, there's a high probability you're not in the trade. Now we're looking for the sell. Let's see if we get it. Pong, we're looking for a very aggressive buy to the upside. I hope you took it off, but if you didn't, you're in this trade because the trade we were looking for was this one actually taking off from this point, this smaller one taking off, not coming back deep to this level. I'm not there when all of this happened, but if we were there, we would close the trade. Now you don't have to close it. Let's assume now you got tagged in this trade. Let's go with this. So you got tagged in this trade. And you know what? It's not going the way you expect. We were looking for a small running flat here. If that didn't go, you should have closed the trade, take off that entry order because it's an aggressive one. If you didn't take it off and this happened to you, you take it off here, right? You got tagged in this one, it come down back, you go take it. If you didn't take it off there, here's what you're gonna do. Wherever your stop is, and your stop should be somewhere here, which is under the last impulse. You don't wait for it to come back there. You wait for this to make any correction up and close the trade. Let's say this come all the way to the bottom here, go back up like this, close the trade. Once you see a correction here, we'll close the trade and go for a sell. But what if it actually does this? It comes a little here and then it goes back up like that. You're still in the trade, right? So could this be a bigger flat forming here for an upside? Possible. So now we're going to wait to see what that does. You are not going to let it come and take you out there. There's no chance you should let that happen. You're going to try to get out anywhere in here for much smaller loss when that happens. But this trade should have been off because we put this trade for a very small running flat at the top. But just assume that you got tagged and you're still in the trade. we'll manage this out within this session. Aussie, we're looking for a buy because this is a consolidation. It could even come back to the low, but this is a big consolidation for upside. So you're looking for a buy setup. Our thought process this morning was that it probably would have come all the way to the bottom here. And if we get a buy setup here, we'll take it from here. So if it comes this time to the bottom here and then make a buy setup here, we'll buy it from the bottom. Do we want to sell that to the bottom? No. Again, this morning was the same question. Should we sell this in the 15 minutes going down, right? And I said, no, we're not selling, because the idea is that the bigger trade is to the upside. If you sold to see what happened, you will get break even, but you're in a lot of trade movement that you didn't need to be in because you know it was probably not do that. So this comes back here, we wait for a buy setup and we take the trade. It goes out from here, we should get the trade from above there. I think there's a high probability it's going to come down first, then go back up. But the good thing is it's making a bigger correction, right? These were small corrections. We're making a bigger one, and that one should take off to the upside. It could stay here for a few more days. Maybe till next week we get that trade. New Zealand, we didn't put it. We didn't get anything. Swiss, here's the thing. And Swiss, we had this trade on. You have to take it off. Just like I said, you have to take off the pound. You have to take off the Swiss trade. It's no longer the flat we were trading. So the flat we were trading was this one here. If this comes here and take off, we won the trade. But if it comes to the bottom here and then go back up, you're making a flat for one more down. See? Now, the question is, can this actually go very high? It probably can, but because it comes so deep, you can't buy it at the top here, because all it needs to do is break that top and it can drop. See this one here, when it came down back, it went up there and dropped. So all they need to do now is go break the top, and that will complete the pattern. It can drop. Can it go much higher than the top? Yes, it can go. For very aggressive traders, and this would be only for very aggressive traders, if you get a 15 minutes flag here, not one candle, but a 15 minutes flag here, something like this, because we broke the low, we can take this trade to break the top. And then you will put that to break even or positive. If it keeps going up, good for you. That's a good trade. If it comes back down, take the small profit or break even. Because we came back so close to the low, the probability is we're now making a flat for one more drop. The flat could take a long time. If this is making, remember I said eventually they will correct this entire thing. Take this off. That was a sell. Eventually we will correct this entire thing, right? All these were sell setups. And this is the start of that correction. This might go here, make another one go, make another one go, make another one go. And then somewhere along the line next week, we drop. So can we buy into these? Like I said, if we get a flag here, we'll buy it. But the first one, you'll not take it because it will come right back into you. We'll decide where we can get a trader to go up, where we can get a trader to go up. You'll have to get it from the bottom if it starts doing that. So go to the 15. Wait, what if it makes an aggressive move up? Well, you might have to miss the first one, unless you think you have the ability to manage it. Some traders do have the ability to get in and get out, but in a place where there's a lot of new traders like this, that might be a hard call. Let's see if we get a flag here. If we get a 15-minute flag here, we'll buy it. If you really, really want to take the trade, I mean, on that aggressive move, you have to put an end shorter here. It's an aggressive trade. If I'm going to put this as a buy, it's going to be an aggressive buy. I think the aggressive buy is this one. Yeah, that's the aggressive buy. It means that once you break this top here, you have to be capable of managing that trade if you decide to go down. Because we already know that that possibility exists. That's the power of knowledge. Now, it doesn't mean it's going to do that, but that is a possibility. And that means you have to be prepared for that possibility, right? It's like they tell you a hurricane will come. You prepare for it, whether it comes or not, it doesn't matter, right? You're hoping it doesn't come, but if it comes, you have to be prepared, right? It's the same thing. You know of the possibilities of how patterns behave. So you can use that advantage and say, okay, great, I'll take the trade, but this is what I'm going to do, right? And if it goes up, well, you don't have to do anything. It will take care of itself. You just have to take the profit off, right? If we get a trade here, it'll be great. US news in 15 minutes. We have news today in 15 minutes. Oh, yep. No, 4:30. Something's wrong with my calendar. It's showing, let me just set the time. It's showing news at 3:30, not 4:30 my time. This is, one second, guys. I don't know why. Anyway, it's supposed to be matching with the It's supposed to synchronize with what I'm having now. It's 1 hour difference from my computer. And that's why I'm getting time difference. Okay, I can see that. This time is incorrect. I'll change it. My fault. Let's go back to the calendar and go. Yes, there's news in 15 minutes. Let's go 1 second. Yeah. Anyway, we wouldn't trade the news in here, but if you want to put the entry order before the news, you can do that. You'll just have to be able to manage it, right? There's a high chance if euro is going to come down, Swiss will probably go up. It might be a dollar movement. Pound is going to come down. So if you're in the pound, you may want to take the small loss. Right? If any of you got tagged, and that was a trade in London session you're supposed to manage, but you might want to close it because it's not going to be worth keeping it if they're going to do that. Take the small loss because it could drop. Right? This is a top and it could drop. In a news event, it could drop. So you close that trade, take a small loss if you're in it, right? So we'll put it as closed. We'll take it off. We don't have a sell or a buy set up on it. If you want to go with a buy, put the entry above the top. If you want to counter trade, put the entry above the top. So we'll put the entry above the top for the buy still as a counter trade to what happened. Swiss, we already have the Swiss. Let's see CAD. CAD, let's go with the CAD where we are. It's consolidating. It's not dropping as yet, but it's a sell setup. So we'll stay with the sell. We'll leave the sell right there. In the news, that's okay. No problem. We'll come back and manage all of them. This one you would have closed and the entry order goes below. So you close this trade. You can close it now if you want. You should have closed it here and then you put the entry order below here. It's still a sell. It doesn't matter if it goes back up. We're not looking for this to be a buy with this kind of thing. It has to break the low first. So we're expecting it to drop first. Let's see what happens. EuroCAD. EuroCAD is a sell. You're actually getting a very good sell setup here. And you can move the entry up to this level because that went back. This is one also we were expecting to go back up because we had this flat. You got one, you got this, you get this, you come back here, you go, you make a new high, this should drop. Right? So we'll see if we get that trade. Let's go pound Swiss. They didn't break the top, see? So we keep the entry here. If it broke the top, you put the entry here. The top is not broken, so you can't put the pound yen. Didn't break the top, we keep the entry here. It could still go back up and break the top, then we'll change it. If we get any flag before that, we'll take the trade. Aussie Swiss. Okay, take this off. It's no longer a running flat, right? See, that's no longer running, they're consolidating here. So if they consolidate there, we take this off. Wait for it to finish that consolidation. It could drop. We're not interested in the sell, right? If this is going to drop, we're not interested in that sell here. Let it drop. We're waiting for the buy to the upside. So we'd leave that trade, take that off. Trade didn't tag you. Like I said, if it didn't go the way you wanted it to go, you're not going to beat the trade. You don't have to worry about it. Aussie, New Zealand, this is still a sell. The entry order is good. I like the entry order at this point. It's a good sell. We leave it there. It can go up one more. I see this more as a flat. I see this here more as a flat. And this could go one more up. It's possible. We're not buying this though. If you're buying, buy the dollar yen, the Aussie dollar. Don't buy the Aussie New Zealand. If this drop, we take the trade. Aussie CAD. Okay, so we had a very aggressive buy here. And I hope you could have managed it because the idea of this was that this was going to come break this top. It did break the top, but it actually just tagged the top of the way. We were expecting it to come about here and then come back down for a flat like this. So I put it on as a very, very aggressive buy. If you took the aggressive buy, you should close that here. Once it consolidates in there, you close it. You know the aggressive buy. It came back to the top. It's making a flat. This could probably even go back up. Right? This could go back up or it could drop straight through the structure now. It's a sell. In the bigger picture, it's a sell. But do you want to sell it? Let's see if we have a sell. Yeah, we could take it as a sell setup because we broke the top, right? So this is a flat. If you broke the top, put the entry under the low. So we were expecting a running flat. That is why we said we take it as an aggressive trade. Only aggressive traders can take trade like that. So you can manage your way out very quick when it comes back to this level on the 15. This would be a good sell now, but it is a sell. Remember, the sell is still could be a flat. The sell for this piece could still be a flat where they come here and go back up. But I think this is a good trade. Don't put it here. It can come here, go back up there, and then come. Keep it under the low. If it drops to the bottom, you want that trade. if we're going to correct what we're correcting this entire move up. If this is the correction, all the correction, this would drop really sharp. So yes, the sell is a good idea here. CAD, we're looking for a sell here too, and this needs to go back up. Yeah, this is already going back up. The reason we kept it under this here because this could go back up, making a flat in the middle. One more to the top. We'll try to get a sell from the top there coming down, but once it breaks the top, we're going to put the entry here, and we'll try to sell it from the top coming down. You want a flag like something like this doesn't have it. I think we sold this here because we never got a flag here. You want a flag like this. See this? You want a flag like this somewhere in here, a smaller version of that, and then you take that flag down. So that might be a trade later today or tomorrow. If it's going to drop from where it is, keep the entry out of here. One drop, you're probably going to have one drop only, right? Look at this pattern. You're probably going to get one drop, break the low, and it could go right back up. If this is a 1, 2, 3 for upside, it's going to go right back up. Remember the starting of we traded from this point going down, right? You should remember that the very start from this going down. So that's what we're trying to do now. See how this is going to go. It's coming down really, really slow. And I don't know why that is so. When that happens, two things you're looking for: continuous divergence here, which we're already getting. When you see continuous divergence here, we call that the AB squeeze pattern, where this starts to go like in a channel. It was going to come here, go back up there, come here, go back up there, come here, go, and then eventually break out. One of these are going to break out. If we see this as a channel, we're eventually going to take the breakout. We're going to go for the breakout trade. There's a specific strategy to trade the breakout trade. We're going to take it because this could be a big correction for one more up, especially now that you're getting all that divergence coming down. So there's a sell setup there, but it's a short-term trade. Well, you manage to get positive. I'll put the line here. If it's a channel, they normally come to about the low of the channel and go back up, which would break this low, by the way. So that is a good one. Let's stay with that. Swiss yen. Yeah, you're making a bigger flat at the top there, so we'll have to wait for it. I think it looks like a bigger flat. The chances are this could also be a top. So unless we get a break of the low and a flag, we can't sell it. But to the upside, you can go for the buy, right? At least one more impulse up. And let's go. That is an aggressive buy. You'll have to wait. Well, it's a buy in the making. We don't have the buyers yet. And this one is a sell in the making. It's not there, so you have to wait. It might be even a small buy. This might give you a small buy to the upside. Come back to this level and then drop. So you can go with a small buy if you want. It's an aggressive buy because you're not going to take off above this. This is one move down. This would be one move up. If you're buying this, go for one impulse. Go for an impulse, something like this. 1, 1, 1. Once you get this, take profit. If it does that, just take the profit off. Don't keep it. Right? So that's it. Natural gas, we have a sell setup. It's a very nice sell setup. We'll keep it, and it's still a sell until this breaks the top. If it breaks the top, then we'd assume that they're making. Now you can put the entry order a little higher, which is here. See, now you can put the entry order there because you got a flat in the middle. We didn't put it earlier this morning because this flat was forming, and now you get it. So you were expecting this trade down. If it just stopped short of this and look like it started slow here, we'll close it. Just like the yen, right? It stopped short, it started close down for a couple, slow down, stay sideways for a couple hours, you close the trade, you're not staying with it. But if it drops really sharp, you want that trade because we just completed a very, very big pattern. See, we just completed a big move up. So this could start to drop. Deeper correction like this. Right, so that is a good trade from the top there. Let's go back to the 1 hour. If it's just a flat, you'll still get break even or profit out of it. So this is a really nice setup, by the way. It go or it doesn't go, you put the short and then we'll see. Let's see what else we have. US 30, these are aggressive buys. And aggressive buys mean they might not go very far. So it doesn't go in it doesn't go immediately, take off the trade, right? You should take off. This could go a little more, but take off the trade and put an entry above the top if you want. It's still an aggressive buy if you do that, right? So that's your choice. I don't think they're going to go a lot. We're starting to get divergence. We will look for the sell setup, but we don't have it as yet. But as soon as we see a sell setup in the making, we're going to go for it. This is another aggressive buy you could go for. Same thing. It doesn't go immediately and very sharp. You close the trade. This one, you close them for positive. That's why they're aggressive, right? So this one you took care. It went, it's come back. If you're still in the trade, just close the trade. You have a few pips on you. Wait for it to do this and close it, right? Because if it started to do this, we might even sell it. We were looking for the sell back to the low because this is very corrective structure. This might drop. We didn't put anything here because this one was not at the top and it didn't break the top. It has to break that top. So still probably could go a little more. And this one, we have a buy setup. This is not an aggressive buy. This is just a buy setup. So you're buying this breakout here. It's going, here's the thing. If this stays here for more than 3 hours, you will close it. So we'll have to go back to the hourly. It's there for 1, 2 hours. This is the second hour. This is a normal buy. So I'll allow this to close. I'll allow the other one to close and then we close it. If it comes down, lower. If this comes lower, go back up like that, close the trade. Right? It has to go. We are not expecting them to stay here or to come down back. That means you're going to close the trade because it's not going and it could go lower. See? Pretty easy. So that is for all the trade setups we have. These are not trade, these are just long-term setups. That's for all the trade setups. I'm going to stop this recording here and we probably would look at a second part of the recording